2 billion reasons to buy Bitcoin. Hey guys, what's going on? Jeb here. And in today's video, $2 billion of inflows, a huge cup and handle formation forming on Bitcoin, CPI data that'll be coming out in less than 48 hours, and the next FOMC meeting all give us insight on why $150,000 Bitcoin is coming soon. If you want to understand why I believe that Bitcoin will nearly triple in just the next year, I'm going to show you today why $150,000 Bitcoin is on its way. So without much further ado, let's go ahead and dive right on into it. Crypto inflows have hit $2 billion so far in June. As can be seen on this chart by CoinShares, Grayscale saw $29 million flow out of its fund, but iShares and Fidelity, the two biggest Bitcoin ETFs, saw collectively almost $1.7 billion of inflows into their assets under management this week alone. In total, the multitude of Bitcoin ETFs have seen over $2 billion in inflows this week. Year to date, we've seen about $17 billion in inflows cumulatively, which leads us to the conclusion that over 10% of the flows that have ever gone into the Bitcoin ETFs have come in this week. This, along with everything else we're going to talk about today, indicates that a major breakout is probably coming soon. But that might be hard to see here on CoinMarketCap because of the corrections that we've been seeing lately. Late last week on Friday, Bitcoin went through a flash crash where Bitcoin dropped over 5% in less than 8 hours. We shaved $3,500 off the price and Bitcoin fell below $70,000. This, of course, led to a suppressed weekend on the price and a depressed weekend in many traders' psyche. But it won't last long. We've had our important correction that was much needed on Binance. We originally broke up above $700, setting a new all-time high. Binance has been correcting over the last few days. Solana has been consolidating, dropping 1.6% in the last 7 days, coming back down and testing some support architecture above 150 that was set earlier in the week. Even Cardano has had a short-term correction away from the 77-cent price target that we put on it, having a correction over the last week as well. Cryptocurrency space is following a very important pattern. I'm about to show you what it is. In the history of Bitcoin, there have been 3 full bull markets. The first bull market happened here in 2012. The second bull market happened here in 2016 and 17. The third bull market happened here after the COVID-19 pandemic during 2021 and 2022. Most of you got into the cryptocurrency space here in the third bull market. I actually joined during the second, so I've got a bit of a different perspective on how this bull market is going than you may yourself. And the reason for that is because Bitcoin originally went through a huge flash crash after we started seeing reports that COVID was going global in February of 2020. Bitcoin dropped 63% in less than a month, and then from the ashes of that crash, with the fear of the global economy shutting down and the huge amount of economic stimulus and the stimulus checks that were coming in and everybody being locked up at home, created the perfect scenario, the perfect storm, while Elon Musk and Michael Saylor were pumping Bitcoin to everybody that would listen on Main Street, Wall Street, and in Hollywood. Bitcoin would rally 1,500% in 400 days. And the entire bull market happened in the span of one short year and in one massive impulse. But what normally happens in a bull market is that you have a multitude of impulses. In the first bull market, we had one, a second, a third, and a fourth. You can see them right here. 1, 2, 3, 4. In 2016 and 17, we actually had about 6. We had our first impulse here in September and October of 2015, a second one here in May, a third, fourth, fifth, and sixth. So the bull market didn't happen all at once. It was a more protracted period of rallying, and while we were rallying, Bitcoin would regularly take a 6-month hiatus. We would trade sideways for 6 months, or the Bitcoin market would crash 40%. But it was only one of those two scenarios. Fast forward to today, and everybody's comparing our current bull market to 2020 and 2021's bull market, but that's not fair because there was a very different political and geopolitical landscape with COVID as the backdrop at the time. We're in a more stable era in human history right now, and so our current bull market is probably going to look a lot more like these first two. Why is this important? Well, during the first two bull markets, we regularly traded sideways for between 60 and 90 days, and we regularly corrected between 20 and 40%. So far, we've been trading sideways for over 90 days. Why does that matter? Well, the reason it matters is because if you look at the last bull market in 2020 and 2021, trading sideways for 90 days means the bull market's over. If you look at the other bull markets in history, and frankly, any other market outside of Bitcoin, then what you find is that 90 days of sideways trading is a very good thing. It's consolidation, and it is helping us to set up for the next phase of the bull market. This is, in fact, what we saw happen here in 2023, where we traded sideways, not for 90 days, which is what we've been trading sideways for so far. We traded sideways for 210. Instead of 3 months, we traded sideways for 7. Now, I personally think we're going to break out sometime sooner, largely because of news events like this one and with the Ethereum ETF coming online. But my very strong opinion on the matter is that the bull market is just not over. In fact, if we look here on the regular chart, what we are doing is we're building one massive cup and handle formation. We've got our cup right here. This sideways trading represents our handle. And if we simply draw a price target from that cup and handle formation and extrapolate, it points us all the way up towards $120,000. If we draw our Fibonacci extension, you can see the 1.5 level points to $95,000. The 1.618 level points to $100,000, which I think is most likely this bull market. We're so close to it, we're going to get suctioned up there anyway. BlackRock and Fidelity alone will make sure of that. And the 2.618 level sends us to $153,894.19. You probably saw that in the title. I think it's highly likely that Bitcoin is going to go here, and I think the next phase of the rally will probably take us to $100,000, which will be our third phase. Then a fourth phase very well may take us all the way up to 150, moving on into the later part of 2025. Don't believe me? Just watch. The last several bull markets have sent Bitcoin way beyond the 2.618 Fibonacci level. In fact, our last bull market went to the 3.618 Fibonacci level. If Bitcoin back then had have gone to 2.618, we would have only gone to 48K. We went to 69. The bull market prior to that, Bitcoin didn't go to the 1.618, not to the 2.618, not to the 3.618. No, Bitcoin probably would have gone to like the 20.618. Huge rally. Everything is pointing towards Bitcoin going to at least 2.618 on the linear chart. It'd be 1.618 on the logarithmic chart even. And I think that that's going to happen at some point in the next year to the next 18 months. So stay tuned and pay attention, because that level is one that you're not going to want to miss. And I'm going to show you a few more reasons why I think that's going to start relatively soon. For one, we're about to see an FOMC meeting happen on Wednesday. This is something you're going to want to pay very close attention to, because the FOMC meeting and the BLS CPI report are going to be coming out on the exact same day, which is something that doesn't normally happen. The confluence of both of these pieces of news is likely going to lead to quite a lot of volatility on Bitcoin, which Bitcoin could desperately use right now because it is trapped in this trading range between about $66,500 and about $72,000. Whether this news breaks us bullish or bearish does not really matter. The long-term landscape on Bitcoin is exceedingly bullish, so even if we do break bearish, simply breaking out of the trading channel will give us enough volatility to get back underway soon. We are going to see the interest rate stay exactly the same here, so this may not impact markets very much, but CPI is something we're going to watch very closely, because how CPI moves impacts the way that the Fed is going to move interest rates as time goes on. Eventually, the Fed will start dropping interest rates, which will even more stimulate the United States economy, which will more stimulate the United States stock market, which is currently at all-time high, which is a huge bullish catalyst for Bitcoin, and that's going to pump even more money into Bitcoin moving into the later part of this year and on into the beginning part of next year, which will help Bitcoin because it'll be seen as an area where profits can be taken out of the stock market, moved over into Bitcoin that is risk on, and then it will grow even farther up towards that price target of $150,000. What's the point here? Should we be investing right now? Yes, I think it's a great idea to be buying Bitcoin on a regular, consistent basis. What we teach is an investment plan that looks like this. Every interval, we will invest X amount into Y cryptocurrency portfolio on Z cryptocurrency exchange. That's the formula. That's the template. Here's how you fill it out. Every Friday at 2 p.m., we will invest $100 into Bitcoin on crypto.com, whatever it may be. That's how you succeed. You follow an investment plan. I think Bitcoin's going to $100,000 to $150,000. I would start taking profits around 90 to 110 at the latest, and then continue taking profits as time goes on, maybe 1 to 2% a week. But that's how you would invest. So make sure, if you have not already, to find a great place to invest, and where you can do that is none other than crypto.com. Today's video is brought to you by crypto.com, and I'm so excited for this because there's so many ways that you can make money on crypto.com. Number one, you can actually start doing your recurring purchases here on crypto.com, which is the perfect place to get your feet wet. But after you've got some money on crypto.com, you can come up here to products and go over to crypto earn, and you can actually start earning rewards on your Bitcoin and Ethereum. This is like a high yield savings account for your investments. Not only will you be putting money into Bitcoin and Ethereum every single week, it'll also be increasing in value because the market value of those assets is going up. Then you are also getting 5% added on top of your Bitcoin and 5.5% added on top of your Ethereum when you put it in the Earn program, which is being paid out not in dollars, but in Bitcoin and Ethereum that is still going up in value because we're still in a bull market. So if you have not already, make sure to sign up for crypto.com with the link in the description box down below. It really helps to support the channel, keep the lights on around here so that we can continue the mission of financial sovereignty and teaching you guys how to succeed in crypto. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel. We're going to wrap it out. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys at 150,000. Peace.